Welcome to the Killik Co podcast for Tuesday the 27th of May. Again, a shortened week by bank holidays both here in the UK and indeed in the US. But Europe was open, and Europe yesterday was digesting the changing landscape following the European elections, and of course that actually led to stock markets moving higher. We'll take a look at the DAX, the German index, a little bit later, but it has moved to an all-time high and it's trading quite close to that all-important 10,000 level. London market has opened positively. It's playing a little bit of catch-up with Europe. That's despite the fact that one of the big sectors, the pharmaceutical sector, will be disappointed to some extent that Pfizer has pulled out. Share prices at AstraZeneca trading around 2.5% lower this morning, back down to that £42. So let's take a look at the diary for the week ahead. In terms of schedule information, it is going to be quite a thin week, but we'll highlight on Thursday that we have the second reading of the US GDP for the first quarter. Now, the first reading was really quite a shocker. Indications were that the economy was expected to grow at around 1.2%, but the number came in at 0.1%, and weather conditions were really cited for the material difference. It does beg the question whether these weather should have been taken into account when the economists were actually sort of guessing at how fast the economy was growing. But that being said, this second reading will either confirm that that was either an anomaly or indeed confirm up the number. Focus obviously turning to the Q2 number, obviously as we trade through to the end of June. We have seen some industrial numbers, we have seen some retail numbers that are falling a little bit short of where they need to be if we're going to see quite the rebound in the US economy that is being priced in at the moment. So let's just take a look at some of the charts. Well, we're going to start with Europe and move to the DAX. This is the chart of the DAX index over the course of the last year or so. The real key here, of course, is that having hit the sort of top of the range around 9,750 on numerous occasions, it's now broken through. As of yesterday, pushing through to close to 9,900. And the story will obviously be this week, can we get through 10,000 on the index there at the DAX? But that's been sufficient to take the FTSE up modestly in trading this morning. We have a similar pattern of really nudging up against this sort of 6,825 level, 6,835. It's on numerous occasions again that we've done that and then shied away. The retracement on each occasion taking us back 200 or 300 points. Will we push higher this time? And if so, if we can break through that level, then of course we'll have our own 7,000 moment just shortly on the horizon. If we are going to get there, well, it's going to be sort of situations similar to what's happening at InterContinental Hotels this morning. The weekend press for Sunday Times alluding to the fact that InterContinental Hotels has rejected a bid worth around 6 billion. So it's certainly not in terms of the size of an AstraZeneca. Indeed, InterContinental is about 1/10 of the size of that company, but nevertheless it's another example of a potential US company finding a deal attractive in the UK with the current state of the tax regulation between the two countries. So InterContinental rejecting that particular bid, but the market has taken the stock price up another 5%, well through its all-time high at that company. Turning back to more domestic matters within the UK, and I'm citing the chart of Travis Perkins. It's really all to do with UK DIY. Numbers that came out late on Friday from GfK indicated the DIY market is really enjoying a big surge in demand. The number was strong in March, but that to some extent was put down to very weak comparatives for 2013 with the poor weather that we were experiencing at that time. But that momentum has continued through April, and growth of around 21% was being cited. Companies like Kingfisher, which owns B&Q and Home Retail, these sort of businesses are expected to, when they report their numbers in the course of the next week or so, to experience strong demand. We have a buy note out on Travis Perkins, and again, what this chart serves to highlight is after some strong momentum up until the sort of end of February, that sort of interest rate sentiment weighed on the sector. for 6 to 8 weeks, and we saw a retracement back from 19.50 back to £16. But we're sort of rebounding quite strongly, and again, we do think that's a good entry point into that stock. One other sector which has lost momentum, but we think seems to find a bottoming up process, is the whole internet e-commerce market. Big names like ASOS, Ocado have seen their shares retrace by close to 50% over that period of time. And it is, of course, when do you choose your level to become involved? We've always liked Ocado. It's just the valuation that has put investors off over time. Ocado has certainly built a good footprint into the food retailing industry with high barriers to entry to its logistics-based model, and is having some success in building that mandate out to other retailers, with rumours in the pipeline that they may well move into the international markets at some stage. So really it's a valuation call. Having peaked out at 600 pence, the stock came back to 300 pence. Conventional analysis of valuations on Ocado, difficult to achieve, but there's undeniable momentum within the business at the moment, and having retraced that 50%, we think it's a good time to look at that stock. Finally, just to cover off the position in the currency market, the key story remains the euro-dollar. We have had having touched the sort of 139.5 level around the time of the last ECB meeting. In the second half of that meeting, President Draghi, he was looking at just alluding to some action in June, and since then we have really seen that activity leading to a weaker euro, losing around 300 pips since that time. So the market is moving into June and starting to think hard about what the ECB is going to do at its next meeting.